Salam no. Indet nachu. Simi Najib Aswad no. That's the end of my Amharic skill, so please don't expect. My name is Najib Aswad. Thank you very much for your time. I lead an international advisory firm based in the UK, IFCAP. Over the last 15 years, I've been blessed to work in the Islamic finance space, doing projects in 50 plus countries, and Ethiopia has been one of them. And I'll try as much as I can during this session to discuss other experiences of different countries. No pressure at all. I have a timer running in front of the of the laptop, so I'll try to keep it as short as we can. So we'll have 3 parts in this presentation. The first part will give you a little bit of overview about Islamic finance, Islamic capital markets. Then we will do a little bit of global look at the industry. Then we'll focus on the Islamic capital roadmap, which is adopted and published recently by ECMA. So founding principles of Islamic finance. I mean, first and foremost, probably the most common one is prohibition of interest. So effectively, the simplest way to explain this, the loan contract in Islamic finance is a contract safeguarded for social purposes, social cohesion purposes. So you can only do a lending arrangement with 0 interest and any kind of benefits, even non-financial. That principle effectively make it very difficult for conventional finance to do most of their products they do on sort of debt financing or financial arrangements that are not based on equity. There's also an important concept of prohibition of excessive uncertainty and gambling. I mean, gambling, I don't need to explain it. It's a win-lose situation. One of the objectives of Islamic law is to create a sort of cohesion in community. So anything that creates conflicts or disputes is prohibited. And that's why you'll see uncertainty when it comes to commercial products is very important in commercial contracts. And this needs to be reduced as much as possible. Of course, uncertainty will always remain an integral part of life. So we have to mitigate as much as we can. I mean, naturally, when you prohibit the loan contract, you need to use different types of contract for finance. And that's why you'll see Islamic finance using contracts of sale, lease, partnership, investment agency, which effectively will create sort of asset-backed, based-linked financial transactions. And when you have this kind of relationship, moving from debtor-creditor relationship to partners, to buyer and seller, there will be different types of risk management and more of participation and risk sharing. And all of this covered by a comprehensive ethical framework, things like not exploiting somebody unable to pay their debt, or things like doing activities that are harmful to society and the environment. Now, trying to apply these prohibitions in the context of Islamic capital markets, naturally, when you eliminate or prohibit interest, you lose the interest-based instruments. So things like, preference shares with fixed returns, interest-based leverage and lending, any other types of interest-based instruments, bonds, treasury bills, they're all prohibited. And when we said excessive uncertainty is also prohibited, then we've lost most of the derivatives and also anything that is creating sort of uncertain outcomes like trading on margin, buying on margin, short selling, and so on. Now, in terms of equity, because it's naturally profit-sharing instruments, like common stocks I'm talking about, as an instrument, it's okay to use it in the Islamic finance space, but you have to think about it like when you do ethical investing. So there will be some screening process. So any stocks where the main business activity is not compliant with Shari'ah requirements, like a company, manufacturing alcoholic beverages, they will be screened out. Of course, there are other screens and things that needs to be looked at. Now, the other types of principles, if you want, or prohibitions in this context are probably universally accepted requirements. So nowadays, even conventional regulations, prohibit things like insider information, market manipulations. But effectively, what we're trying to achieve in Islamic capital markets, having ethical, prudent, and just and fair financial system where all transactions are beneficial to all parties. So congratulations, you're certified scholars now. or is just the start of your journey? So we just wanted to give you a little bit of a feeling about the principles of Islamic finance and capital markets. Now, these are the main components of the industry. Just like conventional finance, banking still takes a big chunk. So in the Islamic banking industry, you'll see retail, commercial, investment activities, and then capital markets comes next. Primarily funds, Islamic funds, but you'll also see sukuk. Sukuk is the Sharia compliant alternative to bonds. It's a sort of, if you want, asset-backed instrument or asset-based instrument where each sukuk represents undivided share in a particular project or underlying assets. And then we have the insurance. It's called takaful. We have life and non-life products, not necessarily in Ethiopia, but also across the world, although Ethiopia is making good progress on that front. And then we have an interesting component in Islamic finance called social finance. So this is focused on microfinance activities, which a lot of them use interest-free loans. In addition to other types of instruments, we have something called Hajj, Waqf, and Zakah funds. So Hajj is the Muslim pilgrimage where Muslims save their money to go to Mecca. We have Waqf, Islamic endowments. We have Zakah, which is the compulsory almsgiving Muslims do on an annual basis. So there are now funds who actively work in this space. And the last but not least aspect is the Islamic fintech, the Web3 players. We have a lot of movement in peer-to-peer financing, equity financing, and also in the Web3 space. So the industry, giving you now a little bit of a global view of the industry. So the latest statistics, and this is based on a report issued by the London Stock Exchange Group and ICD. ICD is a subsidiary of the Islamic Development Bank. They're focused on the private sector. So the total industry around the world is around 6 trillion. While the figure may seem huge, relatively speaking to conventional finance, we're looking at about 1.5 to 2%. In the last year, there was a 21% annual growth. And across the last few years as well, we had double-digit growth. There are 2,255 players in the Islamic finance space globally. Now, if you look at the graph on the left side, it shows you the breakdown of the asset. You can see banking making around 70% share of the global industry, followed by sukuk, which is around 17%, then takaful and the rest for the remaining percentage. And if you look at the diagram of the growth over the last 6-7 years, the compound annual growth rate there is around 15%. So imagine from 2018 till this year, every year, approximately we have 15% of growth if we basically equalize it, and expected to reach 10 trillion by 2029. So the world is turning green. This is a diagram showing the countries that have some sort of Islamic finance infrastructure and ecosystem. So as you can see, North America, South America, Australia, Europe, Asia, and Africa. Of course, the greener the country, the more infrastructure they have in place. And this is based on the Islamic Finance Development Indicator, which is issued in the report I've just mentioned a few minutes ago. The top 10 countries, as you can see them there, no countries in Africa, no country like in the top 10 in Africa, but I think last year we had Nigeria in the top 15. But the opportunity is huge for sub-Saharan Africa. So these are the number of countries, 37 out of, I think, 46, around 80% of countries in sub-Saharan Africa have some sort of infrastructure to Islamic finance, whether it's legislation, regulations, or market players, providers. Of course, different types of countries are on different levels in their journey. But what is really shocking, that the percentage of Islamic finance assets in sub-Saharan Africa is 0.25% only. Even Europe has managed to capture 3%, while sub-Saharan Africa is at 2.5. Anyway, thinking of the Muslim population in Africa, we're talking about 30 to 40% of the global Muslim population. If we think of the Muslims as a percentage in Africa, sub-Saharan Africa, it's around 40 to 50%. And that's without even taking into account the fact that Islamic finance has become attractive for non-Muslims as well, for ethical reasons, and also for reasons related to liking the nature of a product where people see it fairer. We have the experience in the UK where I came from, where some of the banks have announced that a third of their customer base are non-Muslims. So now moving to the roadmap. Now, this was, I think, the project started last year, it finished this year around Q1. It was a partnership between Ethiopia Ethical Capital Market and sponsored by FSD Ethiopia, FSD Africa, UNDP, and the technical partner was IFAS, a leading international Islamic finance advisory firm. I was a director at the time, and I was leading this project. So I'm sharing with you the recommendations mentioned in this roadmap to tell you what's the plan now of ECMA. So the first set of recommendations we have, the first 3 items are focused on government support and coordination. If you look at the third item, we identified a very important need of having a national Islamic finance policy, something that links, the objectives of why we have this, how can we achieve this industry in the country, not only at a regulator level, but basically something to be adopted by different ministries and regulators. And interestingly, the National Bank of Ethiopia now is working on a policy as well in this regard. We also propose to have a task force, something we have seen working very well in countries like the UK at the government level, where there is coordination between policymakers, regulators, to basically coordinate the efforts of Islamic finance, and then a steering committee working under that task force focused on capital markets. Naturally, with Islamic finance, as you have seen, it's different types of contract, different types of arrangements, so there needs to be some level of legislative changes. Maybe not as much when you talk about equity, because equity by nature is Shari'ah compliant, but more about other types of instruments like sukuk or other types of liquidity facility products. So with that also there is an element of taxation. As the nature of Islamic financial transaction requires multiple transactions, which may include buying, selling, leasing, this could attract additional layer of taxation, which would not have been attracted if this was a conventional instrument. And therefore, many countries like the UK, Kenya, South Africa have changed their taxation legislation to enable Islamic product development, and only for the purposes of what we call neutrality. So effectively, making sure when a consumer wants to address or use an Islamic financial product, their cost should be similar, whether they choose an Islamic or a conventional. There is neither an advantage nor a disadvantage. Now, the second set here starts with a central Sharia advisory. So think of it like an advisory authority attached to the ECMA to help in providing Sharia standards, to regulate the market and harmonize practices. And we also, of course, I think there was a lot of discussion in the last panel and probably in the last 2 days on the importance of capacity building and public awareness. So when you talk about financial literacy, it's one whammy. When you talk about Islamic financial literacy, it's double whammy. Because now you're talking about financial understanding of products, but also Sharia requirements in relation to these products. And Muslims and non-Muslims have issues in terms of misconceptions. So the Muslims will think this can be charitable, this is not truly Sharia compliant. The non-Muslims will think this is not a product for them, or maybe something that has a religious, basically product offering only. And we proposed a number of strategic initiatives, including advising the government on issuing sovereign sukuk, the National Bank of Ethiopia to Sharia compliant central liquidity facilities. And we understand there's a lot of progress on these areas as well. Islamic pension schemes was also one of the key strategic initiatives. Finally, the branding. Interest-free as a terminology, based on our involvement in the market and what we hear from people, that it has created a lot of confusion where a lot of people, Muslims and non-Muslims, thought this is something that is cost-free, right? At the same time, the terminology Islamic has already been used in the legislation in Ethiopia, I believe in the VAT code. So effectively, using Islamic capital market shouldn't be a problem, or even terms like non-interest banking. So this was the recommendation. Last but not least, as part of the Islamic capital roadmap, we tried to visualize how Islamic finance can be used for the service of the national development goals. And we focused on 3 areas. First one is the economic rationale. So when we talk about Islamic finance, we talk about boosting financial inclusion. We talk about, attracting foreign direct investments, unlocking idle funds, and enhancing access to finance, particularly for SMEs. And then we have the demographic amplifier. So a country like Ethiopia, with Muslim population estimated between 30 to 40%, which are looking for financial products. We have also a devout Christian population, which some still believe that usury is like interest and is prohibited. And we have Gen Z who have shown they have a lot of likeness and tendency of know where their money is being used. They want impact purposes and things that show transparency. So all of this shows that there is demographic amplifier for Islamic finance. And the third area is about market readiness. So with capital markets, we have the experience of interest-free banking, where in relatively short time period, they've managed to capture 10% of the market share, which some countries had Islamic finance for 20 years and didn't manage to capture that, and despite very limited enabling ecosystem. So, of course, there's a lot of focus on inclusivity, making sure Islamic finance is for all. And with this, Amisa Ginalu, thank you very much for your patience. I hope you enjoyed the presentation. These are contact details. Thank you very much. I have a white flasher now on my screen, so I should run away. Amisa Ginalu.
Thank you very much. Good afternoon. We will focus on Islamic capital markets in Ethiopia. Thanks for joining us, all panelists. So actually, in this session, we'll focus on what it will take for Ethiopia to begin introducing Islamic capital market products, specifically Sukuk, equity-based Islamic financing, as well as Islamic funds. So we'll hear from experts from Ethiopia as well as globally to kind of understand on what it takes for Ethiopia. But before that, since we see some new faces, it would be good to have just 1 minute round of introduction about yourselves, what you do, and so. So, Dr. Akeem.
Good afternoon, everyone. I'm Akeem Oyewale from Nigeria. I'm the CEO for Marble Capital Limited, and we are into ethical investments.
Good afternoon, everyone. I am Melika Bedri, the CEO of Zamzam Bank. Unfortunately, my picture was featured doctor, so this is Melika.
Assalamu alaikum, and a very good afternoon to all of you. My name is Farrukh Raza, CEO of IFAS, Islamic Finance Advisory and Assurance Services. We are a professional consultancy entirely dedicated to Islamic finance and working at the forefront of the industry for the last 2 decades.
Thank you. Good afternoon, everyone. My name is Idris Selman. I'm from ECMA, Licensing and Registration Department Head, and also Islamic Capital Market Unit member at ECMA. Thank you.
Thank you, everyone. So actually, just some logistical notes. So since we have limited time, so we'll not be able to kind of take live Q&A. So if you have any questions, please feel free to scan this QR code, and we'll respond via email post the summit. So we'll kind of keep on displaying this QR code so that you can pull in your questions as you see fit. Thank you. So, Wazir Melika, I will start from you. Islamic banks and windows in Ethiopia manage growing liquidity, but the market does not yet offer Sharia-compliant investment instruments in Ethiopia. So, from the perspective of Zamzam Bank as well as Islamic banking windows in Ethiopia, what are kind of the critical gaps you face today because because of the lack of these Islamic instruments? So if you could kind of brief us on the critical gaps you see in the market. Thank you.
Thank you, Gosaye. Thank you for raising a relevant and timely question. As we all know, maybe first I would like to highlight the ecosystem or the context before dealing the gaps that we are experiencing. As we all know, and that's repeatedly mentioned in the presentations, until recently, the Ethiopia financial system was centered with banking services, And unlike other countries or our African brothers, the capital market was not into scene. So this late start commonly applies both for the conventional banks as well as the Islamic banks like Zamzam Bank and the others who are operating on window model. In a way, our problem is dual, unlike the conventional banking sector, because we face same challenge because of the late start, and also there are gaps which we are all witnessed recently by, though the market is open now and the capital market is hitting, the Islamic part of the capital market is not, onboarding till now. I know starting a new thing is not easy. The founder of Zamzam Bank, which is the new business model, I know the hurdles of introducing new businesses and new thinking, but because of our critical role, the interest-free banks or the Islamic part, we are serving a huge society. The customer base now have reached totally like 26 million. We are holding more than 11% of the deposit, which is above 450 billion. So from the inception, it would have been good if the capital market has, drafted the necessary instruments like it did for the conventional part of the world. So these gaps are, in a way, for us, it makes it, more critical and dual challenge. If you look in the conventional part now, the open money market is in place. The liquidity is not, a huge challenge, though it is a challenge as compared to interest-free banking side of the business. Relatively, that one now has got instruments like open market operation, while such instruments are not in place for the interest-free banking sector. In addition to that, the traditional treasury bills itself, if you take it, by its very nature, it is interest-based, and the interest-free bank sector, we cannot, participate in that area as well. And it would have been, if it would have been designed from the inception, maybe we could have learned from the experiences of even our neighboring countries like Kenya. For the treasury bills, they have, equivalent product, and they have managed to raise Jara Sukuk. And in Nigeria case also, there is a lot of experiences that we can learn. So it's late, considering its criticality and the important contribution that we are playing in terms of accelerating financial inclusion, it is, I say it is time to consider and to fill these gaps. Shortly, this is what I can say.
Thank you, Wazir Melika. So I think I understand from your answers that, we are sitting on a huge capital that could be deployed in the market. So in that regard, as previously mentioned, in this panel, with ECMA, FSD Ethiopia, FSD Africa, with UNDP, we have done roadmap for Islamic capital markets. So there were some recommendations that Najib presented very well. So as FSD Ethiopia, we are also trying to work on kind of implementing those in terms of having avenues for those, for that big idle capital sitting there. On how best we can deploy that. Now we'll go to Dr. Akeem. So Nigeria is one of the countries we look up to from Ethiopia in terms of learning from your experiences, your journey, and so. So, from your experience so far, so if you could offer us, drawing, on your experience in structuring sukuk in Nigeria, what would be practical Ethiopian sukuk or equity-based Islamic financing look like, especially we are on our early stages of, going around like Islamic instruments and so. So what would be your recommendations, especially considering the market size, Wazir Melika has mentioned, the big, customer base and so. So what would be your practical recommendations for Ethiopia?
Once again, thank you very much. I think the story of Ethiopia regarding Islamic capital markets will be the story of someone that's been told to go and sell shoes to a nation where they don't wear shoes. It's essentially meaning that there's so much opportunities and you just need to ensure you follow some critical steps. And what are the steps that I will advise the Ethiopian market to follow? I will say 4 key steps, just learning from the Nigerian system. The first is you should start the way Nigeria started, by trying to ensure that you issue sukuk. The first sukuk should be like a government-backed, asset-backed sukuk. You should have the government of the nation or a strong SOE, or a strong corporate actually be the pioneer issuer of an instrument in the capital markets in Nigeria, in Ethiopia, for Islamic instruments like a sukuk. So you could have Ethiopian Airlines, you could have the Ethiopian sugar industry, Ethio Telecoms, one of these big entities. Let us structure for them a corporate sukuk or an ijara sukuk that will allow people to understand how Islamic financing from a capital market can be undertaken. When you use an ijara sukuk, especially if it's for infrastructure by the federal government, it allows you to have easily identifiable public assets that the sukuk will be used to create or to bring to reality, And if you use moderate tenors like 5 years, it allows people to get regular rentals and gives them comfort, and that will allow other issuances to come and follow that path. The second point is I will request or suggest that you match the structure of Ethiopia's liquidity to the issuances that are going to be coming out on the market. And what do I mean by this? I mean, the CEO of Zamzam just mentioned to us they have in excess of 400 billion birr. That is liquidity that needs home, that needs to be invested in assets. So let's ensure that the kind of Islamic assets we're going to create should be something that can tap very, very easily from this huge amount of liquidity. Then the other point I'll mention is that when you have a well-structured sovereign sukuk, it gives Islamic banks or takaful operators opportunity to safely invest the excess liquidity that they have, in those instruments. And finally, I will also say that whatever you use, whatever instrument you are trying to create, please, you must learn the lesson that Nigeria learned regarding credibility and retail inclusion. And what do we mean by this? The proceeds of those issuances, the use of the proceeds must be very, very visible. They must be clear assets that people can easily see. In Nigeria is a large country divided into 6 geopolitical zones. What the government has done with about $4 or $5 billion of sukuk issuance over the last 7 years has been to use those sukuk issuances to build roads, to build bridges in each of these zones of the country. Not only that, each time a road is finished and highway is finished, you will see a sign there saying this road was built by Sukuk 1, by Sukuk 2, by Sukuk 3. I mean, in a couple of years, a lot of people will now been able to associate very high quality roads with Sukuk issuances. And retail investors can also say, you know what, I want my money to be in the next Sukuk issuance. So you have that visibility and that connection. I mean, when Najib was presenting, he already told us that Ethiopia has between 30-40% Muslim population. So you already have a defined demand base. There are a lot of people in the retail, in the banks, in the takaful business that are ready to invest. So let's just ensure that we get a very strong SOE or the federal government to issue the first issuance of the sukuk, match the issuance with the liquidity requirement, ensure there is visibility and retail participation, and that will be one of the best ways of starting to create sukuk issuances in Ethiopia in a way that will be accepted and that will be very successful. Thank you.
Thank you, Dr. Akeem. So while we are with you, it would also be good, the concept of, Ethiopia is starting on collective investment schemes. And so I saw that you have experience on Islamic funds in Nigeria. So if you could, in just 1 minute or two, if you could brief us on the potential of those kinds of instruments to deploy capital?
I think the potentials or the feasibility of such instruments are very high. I mean, given the similarity in the demographics of Nigeria and Ethiopia, first one I would say is because you have a high Muslim population, almost a third or more than that, there is already people that are interested in these instruments. Whether, like Najib mentioned, whether you call it interest-free capital market, non-interest capital market, or Islamic capital market, people already know what that stands for. And an easy way to start, especially the retail space, is if you use bank-led funds. So you already have a bank like Zamzam Bank. If they have a subsidiary or if they can issue and start up an SPV that can start a fund, maybe a money market fund, that will be easy for people to understand. Don't start with very complicated Moderator transactions. No, just even start with an Ijara or a Murabba transaction that people will start to get to know. Let them have a money market fund that they can invest in. Over time, you can evolve into some equity funds, some alternative asset classes that are Sharia compliant. Then you can also, as much as possible, ensure that you create green sukuk instruments. We had the session earlier on ESG and climate funding and all of that. It's going to be a good thing if, as you are starting now, you also ensure that you create instruments that aligns with the ESG pathways of the Ethiopian community as well. Then it also helps if you can create with time Islamic REITs. I mean, we've been told that the presentation that Ethiopia is having a boom in construction. So if you can wrap some of these assets in a proper real estate investment trust that is Islamically, compliant, you're going to have people invest in it, and you're going to have even banks being able to put their assets in it. We think that all these options are easy if you follow the regulations that will be set up by the market authority, by Ethiopian Capital Market Authority, and if you have a very, very strong Sharia advisory board, either at the regulatory level or if you have all managers that will be issuing these instruments to also have Sharia advisory boards. Because the most important thing in any Islamic instrument is that the fatwa that must be issued by the Sharia board must indicate that the documentation for the instrument has been fully reviewed and they are in compliance with Sharia principles. Thank you.
Thank you, Dr. Akeem. So maybe the key takeaways are on building credibility, since, once you lose confidence of the public, it would be kind of very difficult to rebuild. So having clear visibility of where the investments have gone to and all the proceeds have gone to. And so I think having that trust is also good, and kind of embedding Islamic angle to the range of products that we have, including REITs. And so I think that's good. Thank you. So, Mr. Farrukh, I will come to you on, Dr. Akeem has raised on governance and, the Sharia board. So, from Sharia and regulatory advisory perspective, what essential governance and regulatory structuring elements, including sukuk guidelines, Sharia supervisor frameworks, trust arrangements and disclosure standards should Ethiopia prioritize to confidently introduce Islamic capital market products, and what guiding principles should guide the design of these frameworks? So if you could brief us on your perspective on this, and we are already working on some Sharia governance work with IFAS, so if you could brief us on that.
Sure. Thank you, Gosaye. And, first of all, I would like to thank Capital Markets Authority, ECMA, and, the organizers to give me this opportunity, to participate in this esteemed, panel discussion. Now, I just want to tell you a very brief story. The first time I came to Addis Ababa, I think it was like 15 years ago, maybe. And at that time, there was no interest-free banking, no Islamic finance or anything at all in this country. After that, I have been coming regularly, and this is probably, I don't know, maybe the 10th time or the 12th time I'm here. And it's a big pleasure for me to see that we have come a long, long way. The country has come a long way. Maybe you think that, you need to do enough. You're not doing enough, but I'm telling you, what has already been achieved is actually great. What is even more interesting is that there is actually a lot of effort that is already in place. So the Islamic capital market roadmap that Najib presented, that IFAS did earlier this year was one of those things, and now we are currently working on two other major projects. So Sister Melika, she mentioned the issue within the interest-free liquidity, interest-free banking market, the liquidity issue, and so on. So we are currently working on those, open market operations and interest-free, monetary policy instruments as well for the National Bank of Ethiopia, which will be very helpful actually in unlocking, the potential and bringing that liquidity into the market and helping all, the financial sector actually to benefit from that liquidity. We are also working on, developing the first, structuring the first sovereign sukuk. So I was very actually intrigued by what Dr. Akeem was explaining kindly. I was feeling that his discourse is actually like he was sitting with us this morning in the workshop that we held at between IFAS as the consultant and National Bank of Ethiopia and the Ministry of Finance, exactly about that this objective of issuing the first sovereign sukuk and also the interest-free treasury bill in order to smooth out all these issues and these challenges. Now, this sukuk, we are hoping that God willing, shall see its day somewhere, I think, in the middle of 2026, God willing. And the discussions that we had were exactly the same, that we need to start with something small and simple. So we discussed about ijara, we discussed about wakala, these straightforward contracts that can be used, and we build the market, and we build the confidence, and we help everyone to come on board, learn, so that in future we can go to more more complex type of structures and maybe more diversification as well. Now, coming to your question, Gosaye, in terms of the regulatory and the legal framework as well, again, I can tell you that Ethiopia is not really at ground zero. A lot of provisions that are required are already there. However, some legal and regulatory reinforcement is required in order to provide that legal anchoring to those instruments, and we are currently working on that. We are doing an in-depth analysis to see whether there are any amendments required to any proclamations, existing proclamation, or if a new proclamation is required, or we can simply address the provisions that have been already included in the existing proclamations. They are sufficient and enabling us to issue only directives. So instead of the primary law, we can actually get away with the secondary law, where the directives can be issued by the NBE or by Ministry of Finance and other entities in order to accommodate and facilitate what is required to provide that legal anchoring that I'm saying, and also facilitating these transactions as well. So again, this is a work in progress. And so far, our work is showing that actually, there is less of a challenge, compared to what we were anticipating. So a lot of things can be resolved at the secondary level, law, and by issuing new directives, we will be able actually to resolve those issues. Now, in terms of some other requirements that are very, very important, I would name two here. First of them is actually taxation. And luckily, we had, the tax policy department of the Ministry of Finance with us this morning. We spent like more than 3 hours in this workshop debating over, different issues, including the tax neutrality as well. Now, it just happens that the Islamic financial instruments, as you all know, because of the prohibition of riba or the interest, they will be always structured around an asset. So meaning that when there is a transaction that involves an asset, that will trigger probably, most likely, some, taxation issues that could be, on the stamp duty side, or it may be withholding tax, or it may be, the value-added tax, and so on and so forth. So how do we address that, and how do we provide a level playing field between, bringing a parity between the conventional financial instruments and their equivalent in the interest-free, instruments as well. So it's very clear, the pathway is clear for us now, that, it shall be exactly the same. There shall be no advantage or disadvantage to either of them, neither for, the the conventional instruments or nor for the interest-free instruments. Now, what is required is actually that the tax policy department of the Ministry of Finance has to now work in providing, those, provisions in the law in form of directives or whatever, to make sure that this happens so that, the products, they are competitive and they are on par with each other. So this is something that will enable, the take-up of these interest-free instruments that are coming in the market soon. And the third one, and the final one, is actually Sharia governance that has been already mentioned by Dr. Akeem. And this is, one of the major challenges that we have to address. And again, we are working on that within the scope of, the projects that we are currently doing. And that is, we are assessing the possibility of either setting up a central Sharia board at the level of National Bank of Ethiopia, or maybe under the Ministry of Finance, or maybe somewhere. But, we are also aware of, the sensitivities around this and, maybe some constitutional challenges that we may be facing. So we are also considering a second option here, which is creating a Sharia board, but a market-led Sharia board. This is probably going to be a very innovative way of addressing, this major challenge, that instead of, having a Sharia board appointed, at the government level and, having, so many complexities around it, maybe we create a Sharia board at the market level, and we take, the members of the board, they will actually come from the market players themselves. For example, the people sitting already on the Sharia, institutional Sharia boards of the existing interest-free banks, or, the interest-free windows of conventional banks. And then we are also building a very robust and comprehensive Sharia governance framework, around that body, to make sure that, the whole market is actually, operating in accordance with, the Sharia principles and rules, and ideally in accordance with the international industry standards on Sharia and, the related accounting and auditing, etc., issued by the standard setting body called IOFI. So these are the things that are, in progress now. That will help, of course, on the banking side, but a lot also on the, the capital market side as well, because obviously both are interrelated and they will be, benefiting mutually from this. And of course, we have already given, the roadmap to the capital, to ECMA, and we are expecting that, this roadmap will be rolled out soon. They have, the last meeting that we had with them a couple of months ago, they told us that they have already starting rolling out, the plan and, started taking the measures. So we are hoping that, these things will be also covered in the implementation of that roadmap. Thank you.
Thank you, Mr. Farrukh. So maybe coming to Idris from ECMA. So as Farrukh, as you mentioned, like in terms of commitment from the government or ECMA in putting in place, the recommendations from the roadmap as well as the white paper, ECMA has taken some bold steps. So one of that is establishing capital markets, Islamic capital markets unit within ECMA that kind of steers, the development of Islamic capital markets in Ethiopia. So coming to you, Idris, so if you could kind of briefly describe what the Islamic capital markets unit does within ECMA, but mainly on, what are your immediate priorities in enabling Islamic capital market products such as sukuk and other equity-based Islamic financing, and how you kind of plan to coordinate with broader stakeholders, including the banking sector, and other regulators like the National Bank, Ministry of Finance, and broader stakeholders. Thank you.
Thank you, Gosaye, for the question. I think I'm the lucky one because most of the points are discussed by Najib while he's presenting the session, and also by Mr. Farrukh. Almost all our priorities were mentioned, but I will just highlight on the key points. From the ECMA point, one of the key aspects of the Islamic capital market is recognizing the market itself within our legal framework. So to start with the legal framework, the proclamation gives ECMA the power and the authority to recognize an additional regulated capital market activities. So based on that, the directive on licensing and supervision recognized Sharia advisory as of one of the capital market service provider activities. So Sharia advisory is within the ECMA regulatory framework, and it is one of the key licensing category in the licensing directive. So that is one of a major milestone and step that ECMA took in relation to functionalizing the Islamic market, the Islamic capital market. So basically the Sharia advisors are authorized to design products, to implement sukuks, to advise companies on Sharia advisory. And there are a lot of authorized activities to Sharia advisors given within our legal framework. So that's the major topic we can say that enable the market. And based on that, we had a very interesting roadmap done by Najib and his team while he was in IFAS. So the roadmap, if you see it available on public on our website, it's a very extensive document. So we are following those recommendations. So one of the key recommendations in the roadmap was to establish or to recommend is ECMA to establish the Islamic Capital Market Unit within the ECMA. So based on that recommendation, the ECMA has already established this unit within the ECMA. So the basic responsibility of this unit will be implementing the recommendations on the roadmap and making functional our Islamic market and giving priorities of the recommendations. There are a lot of extensive recommendations, but we cannot do all of them at once. As Mr. Farrukh said, there are some progressive recommendations and there are immediate recommendations that has to be done right now to make the market functional. So we prioritize some of the recommendations that we believe will enable the market. So to start in that process, the first and key element of that recommendation is in relation to the legal framework, as Mr. Farrukh and Mr. Najib in his presentation and in the panel said, especially in the tax-related activities, or our legal framework is not environmentally conducive as of now for enabling our Islamic market. So what we are doing now is basically to review, extensively analyze the legal frameworks and what should be amended, what can we add, what can we make available to the market. So basically our focus right now is making our legal framework very conducive to the Islamic capital market, in particular with relation to the tax, stamp duties and other value-added tax, because there are a lot of multiple transactions within Islamic capital markets, especially in sukuk transactions. So our current taxation legal framework will expose sukuk framework to double taxation and unnecessary burden. So we are really working hard on that as well. So another is Sharia governance mentioned by Mr. Farrukh extensively. As you know, we have a limited expertise in the area. We are a new market. We are a new for Islamic, not only for the Islamic capital market, but also for the conventional ones. So what we are planning is now IFAS is doing an extensive policy framework review on the national bank, overall the Islamic financial system. So we are trying to integrate in that report, in that study, our own Islamic capital market activities to be integrated with the overall Islamic financial institution in Ethiopia. So we are planning to integrate our Sharia advisory boards and central Sharia advisory boards, because when we look into more jurisdictions, it's now currently more aligned to central Sharia advisory than a decentralized approach. So as a country with a limited expertise and with a limited resource, we prefer to have a centralized Sharia board within the country that will advise both the government, the ECMA, the National Bank, and overall the overall Islamic financial system. So we are doing hard to make that happen so that our market, our Islamic capital market, will enable and will function smoothly. So in terms of sukuk and equity, what are our priorities? Firstly, just to be clear, when we say Islamic capital market or Islamic finance, It's not an act of worship, honestly. It's just an investment. It's just a business. So we really want to make this happen, not only for our Muslim communities, but the country as well, because it will significantly improve our GDP. It will significantly contribute to our economy. Because if you see in other jurisdictions, I think it was last week, I was seeing a news in Tanzania. There was a sukuk issuance and it was oversubscribed more than 400%. You can imagine how they can build the trust. And if you see in almost every jurisdictions, sukuk issuance are oversubscribed. This is because they build the trust and they know the investment and the risk and the returns and everything. So not only the Muslims, but every part of society is engaging, participating in this sukuk issuance. So the economic importance of Islamic capital market is not only for our Muslim communities, but the whole country as well. So we are doing our best to make it happen and to make it practical. So in terms of that, as Mr. Farrukh said, we plan to implement sovereign sukuk issuance at first because it's simplicity, and we can build trust on that. We can build the market from the sovereign market and then go back to the private market and private issuance. Once the confidence is built, once the market trusts that issuance, the design and everything. So I think my time is up. So we can do that. And from the equity side, we have already 4 full-fledged Islamic banks. So every transaction in that area is automatically be considered as a Islamic product or Islamic financing. And in terms of engagement, we really want to have the experience of Islamic banks, experts, and they know the market, they know everything, they know the details. So we want to engage them, we want to onboard them to our engagement. So we already engaged in our previous activities, so we already plan to engage in the future. So they will be the cornerstone and the foundations for the Islamic capital market as they are for the Islamic finance currently. So I think I have to finish right here. And I would like to thank FSD Ethiopia and our partners and IFAS for their incredible support to our market and to our team. Thank you very much.
Thank you very much, Idris. It's also encouraging to see the commitment from ECMA. So if any of you have any last words that you want to say. Yep.
Thank you, Gosaye, for giving me another opportunity. Very briefly, I just wanted to say that there's a lot of momentum here currently in Ethiopia. I have the opportunity, alhamdulillah, of working across the board, across many jurisdictions. I can tell you all the ingredients required for a successful implementation, development, and growth of interest-free financial sector are here, united in Ethiopia right now. Yesterday, we had a meeting with the governor of the National Bank of Ethiopia, who I believe is also the chairman of the ECMA as well. And his instruction was very clear to us. He said, what other countries have done in 10 years, I want to see that happening in 3 to 4 years, no more in Ethiopia. And we told him that, God willing, we will make that happen all together, including all of you. Thank you.
Thank you.
Thank you, Gosaye. I'm very much glad to hear from Idris the level of preparation the Capital Market Authority is doing to incorporate the interest-free banking sector into the capital market. Actually, in terms of product designing, what I had in mind was perfectly mentioned by Idris. Currently, Ethiopia is undergoing a huge change. There is a huge infrastructure development, and there are also other, telecom and other sectors are also requiring a huge fund. If the capital market is really ready to start by sovereign sukuk, that will be very much relevant to our sector as well, because of lack of high quality liquid assets, especially which are backed by government. Currently, as everybody said it, there is a high liquidity, though it is minimal as compared to the nation which is holding the 50% Muslim community. The resources that the sector mobilized with such short period of time is, enormous. So if this kind of sukuk is issued, it will give us a chance to, invest our resources in meaningful manner, and also it will help us to contribute not only to the sector, to take part in the national development agenda of the nation. No country has developed, leaving aside this critical number of the society. So congratulations to the Capital Market Authority. This is, a good opportunity, though we could say we are late as a country. If you ask me the level of preparedness that we are making, whether it is full-fledged interest-free banks or our commercial banks who operate in window model, the model is very much the capital market instruments are, even if we started at the pilot level, it is very much relevant to our business model, and we are eagerly waiting to be part of this ecosystem. So currently, my bank is registered as the first full-fledged interest-free bank in the capital market. Though it is a regulatory requirement, we showed a big appetite to be part of this game. We are also closely working with Ethiopian Security Exchange, and now we are getting ready for listing. So though the preparedness is there from our side, the ecosystem also should allow us, to get equal playing field to fill those gaps that I was mentioning earlier. So I was critically following the presentation, the subjects that were mentioned in Mr. Najib's presentation, and when we see ourselves in light of those checklists, though I know I am a member of the National Steering Committee, which is assigned to draft the roadmap, so the things that he was mentioning are currently in place in Ethiopian interest-free sector. The Sharia authenticity is there. That part is our DNA. So our Sharia scholars who are sitting in all banks, they are very much experienced and well-respected, scholars, not only Sharia people. So we don't need, to search for other pool of resources while we are having such kind of resource. So we are also, making ourselves ready by designing a product, and we are working closely with fintech companies, because the success of, especially for the interest-free part, the success muchly depends on having fintech companies. The crowdfund is very critical, and the technology, they are not only technology providers, they are, designing product with us. As a Zamzam Bank, we have already launched Ansar digital financing, which is very much relevant for the youth. Samia was mentioning how the youth is relevant to the capital market. So we are there ready to address the youth. Ethiopia is dominantly dominated with a young population, and whenever we think of this part of the business, we have to consider the youth. And we have relevant product, the Sharia authenticity is there. We have already benchmarked the experiences of Malaysia. We sent our team in early to capture, and to get ready for the launching. So if we connect all the dots, I'm very much confident, as it has been mentioned by Mr. Farrukh, our country will be successful, not only with half part, that our involvement will make it complete, and we are ready for that. Thank you, Gosaye.
Thank you very much, President Melika. So I think time is limiting us, so I think we can wrap up here. So if you could give a round of applause for our panelists. Thank you.